There's a bubble.
How do you know?
Trust me, call Venet, buy 50 million in swaps on the MBS. What do we got? Garibaldi 4 triple B.
Mark, you sure?
Yeah, it's time to call bullshit.
Bullshit on what?
Every fucking thing.
The market has literally been crashing, as we have said, basically a month or 2 months ago. And you said even in that recording that you give it till like the end of March and bang, March has come and, we're actually crashing very aggressively. And our moving averages that we also described in that video is spot on as well. I think we've been hugging this 9-period moving average on the VIX, but also the S&P 500 as we've been falling. And then now we've hit the 200 on the daily. There might be a dead cat bounce here, but equally until the signs of, some slowdown, I wouldn't see much of, I haven't seen much of a bounce yet, but I think we're the only channel not to flip flop. I've every channel I watch, like Stocks Today.
You're not going to be surprised. I am secretly voting for Team Mega Big Up. Why? Because that's what the chart says.
Even Bravo's research we respect massively.
We've actually just sent a memo to our clients highlighting that the risks that we've been worried about in recent weeks seem to have dissipated, potentially clearing the path for the stock market to actually resume higher straight away.
They just flip-flop constantly. Like, no one wants that. Like, how are you going to make decisions? Like, they're talking about jobless claims and things like that, but we made a good point that, these jobless claims, yes, they're going down, but what jobs are these people taking? It's just
as we said before, it seems that people are losing high-paying jobs and then they're taking maybe 2 jobs to replace that, two badly paid jobs like working in restaurants or working in Walmart or whatever, after losing the well-paid jobs. So while the numbers of jobs may be going up, but they're not high-quality jobs. They're not well-paid jobs, and they're in the real economy. It seems when you look at the data that people are struggling in the real economy, with the exception of the 10% of the wealthiest. They're doing really well. So all the high-end shops, the high-end malls, and the big-ticket purchases, they're all doing well. But the rest of the economy really seems to be struggling at the moment, and that's going to get worse with these tariffs that the US is putting on goods from everywhere. I mean, that to me is disastrous. Tariffs are another tax. I don't know why anyone would support that unless it was going to eliminate something like income tax, which it's not. So it's just another tax. It's going to make things more expensive for consumers in the US. Trump comes out with nonsense, utter nonsense, that it's the countries that he's tariffing that are paying it. No, it's most definitely not. It's the American consumers that are paying the tariff. Obviously, and how anyone can be dim enough to believe what any politician says about anything, but particularly something that's so blatantly obvious, it's hard to comprehend. But tariffs are bad for the economy. And the only way that the economy improves is reducing the size of the government. And as somebody was saying recently, we're hearing all this good stuff about Doge and what Musk is doing and weeding out all the government corruption and what have you. But it's someone said recently, so it's a little bit like a magician's trick. Everybody's watching all this good stuff on the one hand, but on the other side, the government are increasing their spending. They've just increased their debt limit by $4 trillion.
Oh, right.
So the size of the government is still growing. They're not reducing overall expenditure.
Wow, I didn't know that.
So it's like a magician's trick. They're trying to, the magician tries to focus you on something, on one thing while you've been conned somewhere else.
On the micro side.
The whole thing I was a cynic about the whole Doge thing and the reducing the size of the government from the start, and I remain so. I hope I'm proved wrong, but I'm not seeing it, and this increasing the debt limit, because if Trump really wanted to reduce the size of the government, he has the power to say to Congress, I'm not going to approve any new spending. I'm not going to sign off on the increase in the debt limit. That we need a balanced budget, but he's not doing that, and he's not going to do that.
Share screen.
I mean, there are 2 things that could happen. Either you have massive inflation, the government continues to print a load of money, in which case the markets may go up in dollar amounts, but they'll continue to fall in gold. And if we've spoken about this before, the Dow priced in gold is 50% down from its all-time high as it is. And in my view, we're going to be looking at a 1-for-1 gold Dow ratio. Now, where that crossover happens remains to be seen. Could it be? We spoke last time we did a video about the possibility of seeing $20,000 gold. So could the 1-for-1 Dow be 20,000 Dow, 20,000 gold, which would be 50% down in dollar terms from where we are, and
I'd
gold
love to see it.
seven times from where it is. I mean, that and what I would take a fairly large bet that in some way the Dow gold ratio is going to get back to 1, maybe even below. It's been as low as 0.5 in the past, but the last was at 1 was in 1980 when the Dow was at 800 and gold was at 800. And that was the last time that the ratio was 1 to 1. The all-time high was in 1999 at 42.
Most people say, "Oh, always be long, and you'll only be wrong a little. You'll only be wrong a tiny bit of the time when the market does crash." But I think we're saying, actually, knowing that you should be on the opposite end of these things, you should be saying, "Look, now we've had a massive rise. We're expecting a crash, and then you're right." Not as often, but when you are right, you win big, and then when it falls and everyone's panicking, you're the one buying at the bottom. But
well, exactly. You should preserve cash to buy at the bottom. There's no doubt by any standard the markets are hugely overvalued, more overvalued now than they were in 1929 or other peaks in the market, much more overvalued by any standard. So the markets may continue to rise for another year. Who knows?
That's a very good point you make.
The question is, do you want to take the risk of being in this overvalued market when it could fall by, who knows, 40 to 50%?
And actually, we've just had GDP come in at minus 0.3 or 3% for this quarter. This has only happened in 2022 recently and 2020, and we know those were the two crashes. So that's one thing to bear in mind. In terms of the actual main market, I think we showed it before, looking at the 200 on the daily, which we're at the moment. Where could it go after that? You're looking at weekly, and then you're looking at monthly, and that's basically the two levels where you start adding really heavy, especially after crossover and cross back up and break our favorite 2 moving averages, which is the 209 period moving average. But please don't forget to like, subscribe, turn on post notifications, and join our Discord chat room linked in the description so you can see these plays and get in these opportunities when we do.
In the modern world, great leaders resolve their conflicts with words.
As for me, I like the stock.
Order filled.